How's the Josh?
I think the Josh has never been as good. It's been quite phenomenal. It's probably the best time that we have seen in a very, very long time, where the economy is firing, earnings are firing, markets are kind of reciprocating, liquidity is strong. So I think everything that you would want to from the markets or as an investor, you're clearly seeing this, it's manifesting.
Neil, what would you say? Mutual funds, the Josh has never been higher, I think. The kind of money that you guys are drawing in, right?
Yes, Josh has been a little too high right now in the recent past. So a bit of caution also is necessary at this time, you know. So again, I think people think that markets are just going to go one way, it's just going to go up. And we need to be a little cautious about that.
So I have to ask you, gentlemen, about very simple thing. How to get rich in the next year, in the new somewhat?
Well, I believe the starting point should be to kind of really take that leap of faith that this is India's tech-ade. That to me should be essentially the starting point.
Tech-ade.
Tech-ade, which is that I clearly believe that a lot has happened in terms of technology and technology adoption. But my view is that this is becoming more and more universal, more and more ubiquitous. You have different segments of the country, of the economy, of the society adopting technology, and that I think is doing a lot of good. So my view is that for many years, maybe for the rest of this decade, bet on a tech savvy, young, changing India. I think that is going to be really the theme or the most powerful theme which can play out. We've seen the universe of companies increasing, companies which are totally tech-led, many of them in the consumer space, many of them in the fintech space, the payment space, the investing space. There's a wide spectrum on which technology is making a difference. And I believe that this essentially is going to be the way forward, or an important way forward.
Okay, so let me ask you about this, that I think one thing that investors have learned is to ensure that when they're investing into one of these newer stocks, technology stocks, that they should look out for profits. I think that's a lesson that's been very well learned in the market. What are the other things that one should keep in mind when they're analyzing these newer business models?
I think the starting point is to really see how big this business can become. And for that, you'll necessarily have to take a long-term view. You can't be looking at, say, this quarter, the next quarter, but potentially over the next 5-10 years, how big this business could grow, which is to look at scale, saying can this business be 5 times, 10 times larger over maybe say a 10-year kind of a time horizon, number one. Number two essentially is the path to profitability if it is not profitable, or even if it is just begun to be profitable, is to see that, okay, when this business is full scale, what's the kind of margins it could have, what's the kind of earnings it could have. And mind you that some of these companies may not have accounting profits, but may still be cash flow positive. And that's because that either they are essentially incurring client acquisition costs or are spending on ESOPs, which is not a cash outflow, though it is an expense. So it's not like that one should ignore ESOPs because that's a cost. But it's not something which may be a permanent cost and may not reflect the future profitability of the business. These could be front-loaded, upfront, one-time kind of costs. So one will have to really kind of decipher all of that, filter all of that, and say that, okay, in the next 5-10 years, how big this business could become, what could be its earnings, will it remain cash flow positive business, will it remain capital efficient business, because capital allocation is also as important, and therefore at that point of time, what could be the intrinsic worth of this business versus that, what's the price you're paying for it today.